In today's video, I'm going to teach you how to use Pepperstone Pip Calculator. If you've ever wondered exactly how much a price movement is worth in your account, this tool makes it crystal clear. A pip is simply a small unit of price movement in a currency pair, and the calculator tells you the money value of each pip based on three things: the instrument you're trading, your lot size, and your account currency. In other words, if price moves by 1 pip, the calculator shows how much you would gain or lose for that move, expressed in the currency your account is set to. To get started, log into your Pepperstone client area. From the main menu, head to Trading Tools, then choose Calculators and select the Pip Calculator. This keeps everything in one place so you can quickly check pip values before you place a trade or adjust an existing one. Using the calculator is straightforward. First, pick the instrument you want to analyze. You can choose major forex pairs like EUR, USD, or GBP, USD, or even commodities such as gold, shown as XAU, USD. The instrument matters because different markets have different pip sizes and price conventions. Next, choose your account currency, for example USD, EUR, or AUD. This step ensures the PIP value is displayed in the currency you actually use, so you don't have to do any conversions later. It's a simple choice, but it's essential for clarity. Then, enter your trade size, also known as lot size. As a quick refresher, one follows lot typically represents 100,000 units of the base currency, 0.10 lot is 10,000 units, and 0.01 lot is 1,000 units. As your lot size increases, the value of each pip increases too, which has a direct impact on your potential profit or loss. Once those fields are set, click Calculate. The calculator will display the value per pip for your setup, and in many cases, you'll also see simple profit and loss estimates. This is especially useful when planning stops and targets because it shows how each pip translates into real money for your position. Here's a quick example to bring it together. If you're looking at EUR USD with a lot size of 1 kilo, 1 pip is approximately $10. If you reduce the position to 0.10 lot, it becomes about $1 per pip, and at 0.01 lot, it's roughly 10 cents per pip. That scaling effect helps you size positions to match your risk tolerance. Use this calculator before you trade to understand your exposure, fine-tune your lot size, and keep your decisions data-driven. It's a small step that makes a big difference in your trading discipline.